Dad, I've been thinking about starting my own business, but I'm a bit nervous. Everyone talks about how rewarding it can be, but also how hard it is. What do you think?
Oh, starting a business is definitely a journey. There's a lot to love about it, but it's not without its challenges. Let's talk about the pros and cons. On the pro side, having your own business gives you freedom. You get to decide what you work on, how you spend your time, and how fast you want to grow. The sky's the limit when it comes to your income potential. Plus, there's a real satisfaction in building something from scratch that's yours and being able to create wealth for yourself and ultimately generational wealth. But on the flip side, it comes with its share of responsibilities. You've got to manage everything: marketing, clients, finances, and of course, taxes. And those taxes, they can get tricky if you don't know what you're doing. But that's where good planning comes in. And one of the ultimate cheat codes is to have a great accountant or tax professional. Taxes don't have to be a headache if you know how to play by the rules, and a good tax pro knows this instinctively.
Oh, yeah. I like the sound of making a lot of money and building generational wealth. But taxes? That sounds intimidating already. What should I know about taxes as a business owner?
You're right, it can seem overwhelming, but let me break it down for you. One of the most important things is understanding what you can and cannot write off. The tax code allows you to deduct certain business expenses that are ordinary and necessary to your business, which lowers your taxable income, and that means paying less in taxes. Here are a few things you can write off. Office expenses. Whether you rent office space or use a home office, a portion of your rent, mortgage, utilities, and even internet can be deducted. Business supplies. Everything from your laptop, printer ink, pens, and notebooks. Those are deductible. Marketing costs. If you're running ads on social media or printing flyers to promote your business, that's a business expense. Travel for work. If you're traveling for a conference or meeting, you can deduct the cost of flights, hotels, and meals. But meals are only 50% deductible. Professional services. Hiring a lawyer, accountant, or even paying for courses to improve your business knowledge, that's deductible too. But, and this is where people get tripped up, there are things you cannot write off, but so many people do, and it's not good and it doesn't fly with the IRS.
Like what? What can't you write off that so many people still do?
Well, for example, you can't write off personal expenses, even if they're tangentially related to your business. Here are a few things people sometimes mistakenly think they can deduct. Haircuts or grooming. Even if you're getting that haircut to look sharp for a client meeting, the IRS considers that an inherently personal expense. Clothing. Unless you're wearing a specific uniform or protective gear required for your business, regular clothes don't count. You can't write off that new suit or dress, no matter how professional it looks. Commuting. You can't deduct your daily drive to the office or business location. But if you travel between work locations or for client meetings, those miles are deductible. Entertainment. Used to be that you could deduct things like taking clients to a sports game, but that's no longer allowed. It's important to keep track of what's deductible and what isn't to avoid any trouble down the road.
Uh-oh, that's something I will keep in mind for sure. Thank you, Daddy. But what about tax strategies? Remember when we watched the news a couple of nights ago? The man on the news channel talked about tax strategies and planning. I was really confused when he said that.
You're welcome, Princess. Now you're getting to the good stuff. Yes, there are smart tax strategies that can help you save money. It's not just about what you spend, but how you plan. Sit back, this is a lot. Here are 4 strategies that can help keep more money in your pocket. 1. Maximize your retirement contributions. If you're self-employed, you can set up a SEP IRA or a solo 401k. The contributions you make are tax deductible, which means you reduce your taxable income while saving for your future. It's a double benefit: lower taxes today and retirement security tomorrow. There's a little more to it because you have retirement contributions that are pre-tax and after-tax, but we'll keep it simple for today. 2. Use the Section 179 deduction. This allows you to write off the full cost of qualifying equipment or software in the year you purchase it. So, if you buy a new computer, machinery, or software for your business, Instead of spreading the deduction over years, you get the full benefit right away. It's a great way to reduce your taxable income quickly. This one has limits. For the tax year 2024, the annual max limit you can deduct under Section 179 is $1,220,000. That amount is reduced by the amount of Section 179 property placed in service during the 2024 tax year that exceeds $3,050,000. Also, there are certain types of property that qualify and some that don't, but our tax professional will let us know when we have our end-of-the-year tax planning session. 3. Hire family members. If you hire family members like your spouse or kids to work for your business, their salaries are deductible. Plus, if your kids are under 18, their wages aren't subject to Social Security or Medicare taxes. It's a win-win. You lower your business's taxable income and help out your family. But since you're still a kid and you don't have a family yet, no need to worry about this one. 4. Take advantage of the home office deduction. If you work from home and have a space that's used regularly and exclusively for your business, you can deduct a portion of your mortgage, rent, and utilities. Just make sure the space is only used for business purposes. It's a great way to lower your business income, especially when you will pay those expenses every month anyways.
Oh, Daddy, I love it when you call me Princess. I can't stop smiling. And wow, I didn't know there were so many ways to save money on taxes and save for retirement at the same time. I now understand what the newsman was talking about, and I see how planning ahead is so important.
Exactly, and guess what? There's so many more tax strategies out there. We just covered a few common strategies. But it's not just about paying taxes. It's about strategizing to keep as much of your hard-earned money as possible to meet your short and long-term goals. The tax code is there to help, but it benefits business owners a lot more than non-business owners, especially when you understand how to use it. And the key is being organized, keeping track of all of your business income and expenses, saving those receipts, and having a knowledgeable tax professional on your side.
Thank you, Daddy. For all of this information, I am not as nervous as I was earlier, and I know you'll have my back. I can't wait to start my own business one day. I love you, Daddy. Now it's time for me to go outside and play with my friends. See ya.
You're welcome, Princess. I love you too. And I will always have your back. See ya. For everyone watching, don't wait until tax season to start thinking about all of this. The sooner you start planning, the more you'll save. And if you don't have a tax professional, you may want to consider finding one. Even if you only go to your tax pro for tax advice or Q&A, it's better than not having that guidance at all. Like they say, it's better to have and not need than to need and not have. If you found this video helpful, please hit the like button and leave a comment if you learned something new or interesting. And don't forget to subscribe for more tax tips and share this video with anyone you think needs to hear it. Until next time, remember, work smart, plan smart, save smart, and keep more of what you earn.